Good afternoon, Portland metro area. It is Wednesday. I am Jennifer Tim. I am a real estate agent licensed in both Oregon and California, and I am a real estate wealth advisor. So it's time for our midweek market brief where smart money watches the market. Let's jump right in. So first off, we're going to start with our national outlook, and this is what's new today. So as you know, we pull our information with 24 hours and actually typically 12 hours of presenting it because we want to make sure that you have the most up-to-date information. So jobless claims are down to 216,000 for the week ending November 22nd. It's the lowest level in 7 months, suggesting layoffs remain low. Builder sentiment is inching up, but still weak. So the National Association of Home Builders Home Housing Market Index rose to 38 in November from 37, but remains under the 50-point threshold. And the implication of this is they're still reluctant to start building new inventory that could come to market. Many builders are cutting prices. 41% of builders reported price reductions in November, a post-COVID high. And economic activity steadies with warning signs. The latest beige book, the Fed summary, shows U.S. economic activity largely unchanged, but some districts seeing weaker employment and softer spending. Our national outlook, the heat map for housing and the economy, layoff risk remains muted. Weekly jobless claims fell again, signaling no surge in unemployment. Of course, when people become unemployed, then housing, definitely purchasing a new home is typically not on the cards. And often we then have experienced problems with folks who can no mortgages. New build home optimism returns slightly. As we just mentioned, builder sentiment ticked up but remains below neutral threshold. So we're not seeing a lot of new inventory coming from new builds. Discounting entering that new home market with 41% of builders lowering prices. Buyers may start seeing better deals on new construction. Mixed macro signals. Economic activity is flat across many regions. Consumer spending is soft and households are cautious. Headwinds for demand if sentiment deteriorates, and still low pipeline of new inventory. Tight supply plus cautiously optimistic builders could keep resales and rentals relatively in balance. Our mortgage rate watch, and as always, we pull this as soon as it's been updated for the day, which is 4 o'clock 4 p.m. Eastern Standard Time, 1 p.m. Pacific Standard Time, and these are rates from today. So our 30-year fixed is 6.22%, 15-year is 5.78%. And of course, we get this information from Mortgage News Daily, and this was their commentary today. Mortgage rates slightly higher, but remain near long-term lows. I know it's hard to think of that, but historically, national average over the period that they really measure this is 7%. So we are below that. Wednesday was far less eventful than the first 2 days of the week as far as mortgage rates were concerned. The average lender raised rates just a hair, but apart from yesterday, these are the lowest levels in a month and very close to the lowest levels in more than 3 years. Bond markets and mortgage lenders will be closed tomorrow for Thanksgiving. While Friday is technically open, 9 times out of 10, it may as well not be. In other words, the Friday after Thanksgiving really sees any meaningful movement in mortgage rates or the underlying bond market. So we'll have to see how things go next week. Our national smart money insight: with layoffs still low and builders beginning to discount, we're entering a wait and see bargain window. For buyers, especially in new builds or new construction resales, this could be a chance to secure a home at a discount before broader sentiment and prices recover. For investors and sellers, keep a sharp eye on consumer sentiment and job data. They'll drive demand more than interest rate cuts in the near term. Moving on to our local spotlight and local market spotlight, starting with Portland. Median list price remains unchanged at 649,000. Price per square foot is up to 309. Inventory is down to 1,417. Median days on market remains 77, and we are still at a market action index of 39, implying a slight seller's advantage. Our smart money insight, despite stable prices and a flat MAI at 39, the market leans slightly in favor of sellers due to constrained inventory, with over half of its listings seeing price reductions. Buyers move decisively and negotiate may well capture value, especially before any upward trend resumes. Moving on to Lake Oswego, median list price is down to just under 1.4 million. Price per square foot up to 492. Inventory is down. It's 161 homes. Median days on market is up. So we've got a little bit of up and down going on here. It's 133 days. So we are in a slight seller's advantage, and that went up a point. Lake Oswego is showing early signs of market tightening, with MAI ticking up slightly. Inventory remains limited, and 52% of listings have seen price drops. Smart buyers should monitor closely. This pause could turn into appreciation if demand picks up. Strategic offers on price-reduced homes could pay off. And finally, Beaverton, median list price remains at 629,900. Price per square foot, 299. Inventory is down slightly to 281 homes, and our median days on market remains unchanged at 63, and our MAI is at 40, so a slight seller's advantage. Beaverton stands out with the strongest seller momentum, low days on market. As buyer activity outpaces inventory, upward price pressure could follow. Investors and buyers may want to act soon before rising competition drives prices higher in this comparatively affordable submarket. Don't forget to watch your feed for market data for some of the other areas that we cover. And moving on to our global perspective, the National Association of Realtors recently published an article and highlighted that foreign buyers are returning to U.S. Why I like to really monitor this is I am a certified international property specialist, so monitoring their global influence, both in our domestic market and those global markets outside, is definitely really important to my clients. So we're seeing a surge in international buyings. Foreign buyers purchased 78,100 US homes between April 2024 and March of 2025, which is up 44% versus the prior year. 56 billion invested. Net buying activity translated to 56 billion in existing home purchases, a 33.2% increase year over year. Record high median purchase price. Foreign buyers paid a median of 494,400 per home, above the national median for all buyers. Cash heavy transactions. 47% of foreign buyers paid all cash, versus 28% amongst US-based buyers, giving them an edge, especially in competitive or high-rate environments. Investment and vacation home demand is strong. Nearly half of foreign purchased homes were for vacation, rental, or investment use, more than triple the rate for domestic buyers. The top US destinations, the most popular states remain Florida, California, Texas, New York, and Arizona. So it's those coastal, high amenity areas and traditional gateway markets. So diving a little deeper into those hotspots. Florida, 21% of all foreign buyer purchases went here. California, 15% share, making it the second most popular state for foreign home purchases. Texas, 10%, and it's a stronghold, especially amongst buyers from Latin America and Asia. New York, 7%, and this continues its role as a global gateway market. Arizona, 5%. It's because it's becoming increasingly attractive as a lower-cost alternative with sunny weather and growing appeal to retirees and investors. So why these markets matter? These states combine location appeal, so the coastal Sunbelt, global gateway metros, with strong demand fundamentals, making them magnets for foreign capital. Foreign buyers tend to pay above average prices and often purchase with all cash, strengthening price floors and liquidity. They are often seeking investment or vacation properties, meaning even when domestic demand slows, foreign demand can keep uh, these markets going. So our smart money insight, global capital is returning and it's flowing preferentially into sunny, high amenity or gateway states. If you invest or list in real estate in Florida, California, Texas, New York, Arizona, you're not just competing with local demand, you're playing in an international marketplace. That adds a layer of liquidity, pricing power, and long term value support many US buyers don't factor in. So think about that. Or if you want to have a conversation about an investment portfolio where you may have properties in those areas that will not be performing and you're ready to sell those and do a 1031 out of them, this would be a good time because those international buyers are back. If you are looking to invest in those areas, just be aware that you've got added competition from primarily cash buyers. So make sure those offers are strong based on the demand in those areas. A wealth building insight today is about staging for properties that warrant it. So, and I've titled it Staging Your Way to Stronger Offers because, boy, it does that. First impressions count. Boost curb appeal with fresh landscaping and clean entryways. Drive-by buyers become interested buyers. And I can tell you story after story of having buyers in the car with us or following us and pull up outside a home. The inside of the home was fantastic. They saw it online. That's what attracted them. And they called me and said, let's go check it out. They pull up outside and basically say, you know what, don't even bother. We are not even going through the door. We hate what it looks like from the street. So it makes a huge difference. Staging helps buyers visualize. Neutral decor lets buyers imagine themselves in the space. The rooms feel bigger, brighter, and more functional. Staging leads to faster sales. Staged homes spend less time on the market. Again, think about where buyers start their shopping. They're starting online. And when what they see online looks light and bright and airy and spacious, and they can visualize themselves there, then they will text me, call me, say, okay, let's go and have a look at this property. Happens all the time. And it really, staging creates urgency with move in ready feel. Staging leads to higher offers. Staged properties often receive better and multiple offers, enhances perceived value without major renovations. Emotional connection. Buyers connect emotionally to a lifestyle. Professional stagers know how to highlight the highest and best use of that home and the lifestyle that's possible there. That is their job. They are absolute artists. They are professionals at what they do. And it's amazing to see families or individuals when they walk into a home that's beautifully staged, how they truly connect to what they feel and how they feel they can live in that home. Staging objections and justifies the asking price. Staging is a cost-effective investment. Staging typically costs less than the first price reduction. Let me say that again. Staging typically costs less than that first price reduction. Potential for 5 to 15% higher sales price versus unstaged home. That's a really good statistic to know. So our wealth building insight, our smart money insight is strategic staging is a low cost, high return tactic. Savvy sellers know it's not about decorating, it's about positioning your property as an asset worth investing in. Let's get those buyers through the door. So if anything in today's brief spark questions or inspired a next step, I'd love to connect. Feel free to call me, text me, email me, whatever it takes. Let's schedule a confidential consultation tailored to your goals and timeline. As a real estate wealth advisor, I am focused on helping you build, protect, and transfer that generational wealth through real estate. And it begins with a real estate plan because we believe that your legacy begins with a real estate plan. That is it for today. And I want to wish you an absolutely wonderful Thanksgiving tomorrow. And I hope you have a wonderful time making memories with people that you care most about. And with that, we will see you next week.